All right, good afternoon, everybody. This is Gavin Maguire, event trader, and I am joined, of course, by Chris Duhanci, current trader
Broadcasting
here.
live from the
And we are going
financial
to
district of
do our
Chicago,
weekly
Illinois,
macro
your home of
discussion.
market
So,
quotes and
Chris, how
anecdotes.
are you doing today,
Here's your
buddy?
host of Trader
Pretty good,
Audio,
Gavin.
Dart
Pretty good.
Trader
Keeping an eye on the
himself,
markets,
Jim
trying to get a sense of
Zarosli.
direction,
You are
seeing
part
some
of the rebel
individual
alliance and a
moves
traitor.
within the individual
Take it away.
components, but the indices seem to be stuck between support and resistance. Everything aside from the cues. What about you?
Yeah, I mean, pretty much the same. Just trying to figure if it's an up chip day or a down chip day. It seems like we certainly flip flop between those, and software being on the other end of that barbell, I guess you could say, or seesaw in this matter. We probably would be a better analogy. But definitely some nice calls by you talking about some of those levels that we've been bouncing in between, and we're just going to go through all that right now. First, I just wanted to kind of do a quick recap of what we had talked about last week, and we'll build off of that. But we had talked about being stuck in a trading range with Qs remaining the weakest major index. I think that's continued to play out. Nice little bounce today in it, and some interesting call options on the weeklies that we'll talk about here in a moment. We had mentioned relative strength favored SPY, followed by IWM and Diamonds. Diamonds having a nice day today with that Sherman-Williams report. So, that's some of the things that we've been watching on the overall market. You had identified that 470 area, which we got right up to the cusp of it. Weren't able to get through it. Of course, tomorrow is Fed Day, so we'll be watching that. And then, we noted the weakening Japanese yen, which continues to slide to 40-year lows. Bank of Japan, they're going to be out on Wednesday night into Thursday morning. So we'll be getting both the Fed and the Bank of Japan in the coming days. So that should maybe shake up some of the things there. And then we talked a little bit about commodities, where we talked about oil having a constructive outlook, and it certainly had a nice bounce in some of the headlines there. Has pulled back just a little bit over the last couple of days. Obviously, very headline driven there. We also noted that gold and silver needed breakouts above resistance through the longer term trend. We're still watching that unfold. And then Bitcoin, we remain bearish on. So, it's been trying to find a little bit of a bottoming pattern, but just kind of going sideways. And then, of course, sectors. We talked about trimming technology exposure, which certainly was a good call, and remaining overweight industrials, which have had a good earnings season there. And then we talked about energy being the standout. Google and Tesla, we mentioned both were technically weak ahead of earnings, and that certainly came through. So overall, I would say we're doing pretty good on the scorecard from last week, Chris. Was there anything that you wanted to touch upon from last week's show before we kick off this week?
You know what? I do, but I think a lot of them are just going to kind of come to memory as we go through the charts. Some of the technical levels that I had pointed out, specifically in the USO, the XLE, some of those components. So we can get into that, and as we get along, I'll point those out.
Okay, well, as per usual, so just so people are aware of what Chris and I will be doing on a weekly basis now, we will have a little bit of a hiatus. Chris has some well-earned vacation time coming up here. But, basically on the weekly basis throughout the month, we'll be just kind of touching upon the major macro reads, right? We're going to be looking at the different indices, commodities, and such. And then at the first Tuesday of each month, we're going to kind of do a little bit of a recap and more of a longer term outlook. And then the first Tuesday of each new quarter, we're going to kind of do a quarterly review and a look ahead at the upcoming quarter. So hopefully that works out nicely. So for now, we are still in the midst of kind of doing a little bit of a shorter term outlook and looking at some closer levels here. We will do, since Chris will be off the desk, we will do a little bit of a longer term outlook as well to try to set everybody up going in through the end of the summer. Now, Chris, we're going to increase the degree of difficulty because much like we'll probably hear from Warsh saying that there's a task force for that. There's a lot of unknowns that we're going to be looking at in the next 48 hours that could change things materially.
Yeah, definitely.
But the levels for support and resistance will work in nicely there. So with that in mind, we will start once again with the SPY, Chris. And obviously, we just talked a little bit about it today. It is slipping lower. I do have 74.20 as some staunch support here. I would be a buyer for a bounce off that level in the SPX if we saw that. But kind of curious as to your take on what we're seeing in the SPY today and over the last week.
Yeah, so looking at it today, just a quick overview on an intraday basis. Yesterday, or a few days ago on Friday, we did form new resistance here at 750 down to 746.35, gap lower from it. And we've been kind of seesawing up and down below that range for the past few sessions. Yesterday, we kind of tested right beneath that range, shot lower. And now today we're kind of testing, not the highs, but we're testing that 12 period moving average. We're testing that upper end of yesterday's range. So there may be some, I want to see how we close today. There may be some potential resistance in that area that can turn prices lower. Although we do have the Fed coming out tomorrow, so I think everything is just going to kind of be wait and see. Wait and see what Warsh says and his guidance and what comes out of that meeting. But on an intraday basis, I am paying attention to yesterday's high as well as this resistance range here from 750 down to about 746, that resistance range. That's on a shorter term basis. On a longer term basis, on the weekly chart, which is a pretty similar picture, we have we're pretty much dealing with the same ceiling as we were a couple of weeks ago. We have resistance here from 756.70, 746.75. It's been the current resistance point, current ceiling point. In order to continue making new all-time highs, we need to get a decisive break above this range, above 756.70. We are beginning to see some lower highs develop, or maybe we could call it a double top over here develop. Price is retesting on a weekly basis. It's retesting that 12 period moving average. If we see a break beneath this 12 period moving average and a break below last week's low at 735.20, that's going to open the door for price to begin moving lower and testing this low over here around 718, which is actually a reaction to the 713.95, 702.20 or 702.30 support range below. So that's what I'm pretty much seeing on there. Current resistance 756.70, 746.75, followed by current support at 713.95, 702.25. Not much else in the middle over here besides the 12 period moving average, which serves as either dynamic support or dynamic resistance. Dynamic support in this case. So that's pretty much what I'm keeping an eye on when it comes to the SPY. If we do get a break below 702.25, I'm sure we'll get some hesitation here around those recent broken swing highs. We probably do have some daily support within these weekly bars, but as far as weekly support comes in, it comes in at 655.80, 629.30.
All right, so we'll keep an eye out on those levels there. Obviously, that 756 area providing some staunch resistance, so we'll see if they can get through on that. But next up, we're going to take a look at the Qs here, Chris, which obviously has been one of the heavier groups out here. It's currently trading right at 675. I want to ask you, there's some big bets put on the Qs for the July 31 expiration at 733 and 736. Just kind of curious as to if you see that unfolded in your charts. Obviously that's going to be a bet that Fed's going to be probably a little bit more dovish than some people expected. Another round of strong hyperscaler earnings and of course positive reaction to those earnings. So I would be curious as to your thoughts on those levels, and then overall what you're looking at in the Qs here.
Yeah, you said for the 731 expiration for
the strike prices. Yeah, this is the 731 expiration, and the strike prices again were 733 and 736. About 27,000 contracts in that 733, and another 26,000 in that 736. So a decent sized bet that we're going to see a nice bounce into the end of the week.
I mean, can we get all the way up to 733, around those numbers. Personally, in my opinion, I want to say no. Can we see a bounce higher though? We 100% can, because we are trading out weekly support here at 674.15, 653.80. I am seeing that, but as far as the technicals go, the Qs are the weakest out of the batch, out of the indices, out of the four indices. We do have new resistance that formed over here from 726.40, 719, which will be a wall. What were those numbers again? It was 730, 731, I think you said.
733 and 736 expiring on 731.
Yeah, so obviously anything can happen in the markets, and we don't, bounce higher. We'll get some of those the premiums moving as well. But we do have a pretty strong wall of resistance that formed over here from 726.40, 719.90, that I'll be keeping an eye on. Current support is 674.15, 653.80. And this, I mean, it's looking pretty weak over here because we did take out this swing low here. I did have this level marked off last time, this gray shaded area. And that's what I'm going to do going forward. Any areas that break, I'm going to mark it off in gray so that we could use it as a reference point. And as price broke below that swing low, it's forming new resistance within here on a daily time frame, and we have that 12-period moving average serving as dynamic resistance as well. So that's pretty much what I'm seeing. This is attempting to shift lower. In order for
And those cues could certainly be just a hedge too, right? For somebody with a larger position. So,
yeah, 100%.
right. So, but yeah, no, that wall there is definitely something that people have to be paying attention to if we do indeed get that bounce here.
Yeah. Yeah, so as far as resistance, the second layer comes in 748.65, 738.10. We obviously have to break above that to continue making new all-time highs. But as long as we're trading below this 12-period moving average and below the 726 level, I think this has further downside.
Look at the diamonds here. Sherman Williams obviously providing a nice pop for that on the session. I think 2 weeks ago you had this pegged as the strongest index out there, and certainly seems to continue to prove that as some of its lead components are having some pretty good weeks here. Just chopping around really between that 515 and 535 area over the last month and a half or so. But what levels are you keeping an eye out on here, Chris, for the diamonds, DIA?
Yeah, so the diamonds, they're in a pretty clear-cut weekly uptrend. They're definitely the strongest out of the indices, with the IWM coming in at second. We can go over that in a little bit. We are encountering a little bit of resistance here that formed recently a few weeks ago from 532.50, 521.80. Current support comes in at 513, 500 weekly support. We can probably refine into that area, find some daily levels as well, with the second layer beneath at 495, 487. But this trend it's moving higher. We need to see a break above 532.50 in order for price to continue this weekly uptrend higher. If we do stall and break below, we may potentially form a lower high over here, which may potentially cause a break below this support range. It's going to cause a reaction. It's going to cause price to come back into this level and test it once more. Something that I did notice when I was going through this chart is you see momentum over here. Ideally, if we get a break above 532.50, I'd like to see the RSI making new highs as well, to show that momentum is confirming price and momentum is also moving higher, making new all-time highs alongside price. But healthy looking chart. My only concern is what we do at this level. Are we going to have the power to break above it, or are we going to turn lower and test these lower support areas?
All right, and then finally, last one up, we'll take a look at small caps here, the IWM. IWM here, it is down slightly on the day. It's just something negative territory. Testing that 50-day moving average the last couple of sessions. Has been able to hold up above that. What are you seeing in the IWM there, Chris?
Yeah, so pretty similar technical structure as to the Dow, a little weaker, but similar nonetheless. We have resistance here at 302.75, 297.15. We have to overcome this range in order to make new all-time highs. We need a decisive break and close above 302.75, call it. We are hovering above this 12 period moving average. We do have a little bit of support over here above this recent swing high at around probably 290 down to about 288.50. But the stronger area of support comes in at 276.65, 270.35. And the way that I see it, if we hold beneath this 302.75, 297.15 range and break beneath this 12 period moving average, we're likely going to move lower and test this 276.65, 270.35 support range below.
All right, so let's look at the indices then. So, real quick, with those indices laid out there, how do you see your rankings would be what Diamonds, SPY Q, or Diamonds, SPY, IWMQs, you think?
I think I'd give it Dow 1, IWM 2, SPY 3, and the Qs 4. Strongest to weakest.
All right, I suppose that technical exposure by the SPY just kind of lumps it in with the Qs a little bit more then, right?
Yeah, honestly, SPY and IWM, it's a toss-up. They both look pretty similar.
Yeah.
Yeah.
Fair enough. All right. Let's take a look at yields. Obviously, we have that Fed decision tomorrow. Some whispers of a surprise Fed rate hike. The devils will be in the detail, of course, and we don't know how much detail we're going to get under the new regime. So a lot of question marks, a lot of uncertainty. One of the higher levels of uncertainty we've had around a Fed meeting going into it in some time. But we do have yields. They hit that 470 area, Chris, that you were talking about. They did pull back. They got as high as 421 back on July 23rd. Now about 11 basis points off back to that 460 area there. So watching that's been a key level over the last couple of months here. So what do you see in the 10-year yield unfolding here?
Yeah, so as far as trend goes, we have a pretty clear uptrend on a weekly basis, on a weekly chart. Clear higher highs, higher lows, swing highs, swing lows. Momentum is also confirming that it's also showing price. Momentum is also accelerating alongside price, confirming price action. So this gray shaded area was a level that we were talking about for a few weeks actually. It was from about 467 down to 455, and it was a broken level. That's why I have it shaded in gray. I think last week we were talking about this weekly range forming, which may potentially break above it, and we did. We closed above that range. That's why I took it off. That's why I took that level off. And now price is testing that newly formed support range here from 460 to 450. If we hold above this range, we're likely going to test higher. We're likely going to move higher and begin making our way into the $5 485 resistance range above. So that's pretty much what I'm looking at on there. We do have a couple layers of support beneath it as well. The first layer from 440 down to about 431, and the other layer, which is literally right on top of it, from 430 to 425. So that's what I'm keeping an eye on. Again, pretty healthy uptrend for this. Not that you could trade the TNX, but anytime we're in a pretty healthy uptrend, I'd lean on support areas for long trades on pullbacks. So I see price crawling back into this range here, 5 to 485. A decisive break above 5 is going to lead to a multi-year breakout, and it's going to lead to a breakout out of this entire sideways range that we've been in, and likely lead to another leg higher in rates.
All right. Well, I mean, one of the ways I suppose you could play it is the IEF, which would be the 7-10-year bond. So I suppose I'll throw that chart at you, just kind of maybe lay out some levels that you'd be watching. Obviously, an inverse of yields. long-term downward trend line here. It has bounced naturally with that rollover, but still lays below that 94 area at the moment. So IEF, if you're looking to kind of trade around this and trade it through this vehicle, what would be some levels that you would think that equates to the yields?
Yeah, let me take a look at this. So we have, okay, so the first layer, I'll go two above and two below. The first layer of resistance that I'm looking at is this area here, 94.10 to 93.50. This area is also lining up with that 12-period moving average. It's intersecting through that range. Second layer above, 95.20, 94.65. Very, very similar looking technical structure as a TNX. Weekly downtrend. As long as this weekly trend is low, clear-cut downtrend, I'd like to lean on pullbacks, which is this formation right here into resistance areas to reverse lower. If this range holds, if this 94.10, 93.50 range holds, price will likely move down into this layer of support here from 91.70, 91. We do have some support over here as well. I don't want to neglect that. We do have some support here at around 92.50, which price tested and reacted higher, but the stronger level, so I'll definitely keep an eye on the 92.50, but the stronger level comes in here at 91.70, 91. And then below there, we have a wider area from 90 down to about 88, 85. So that's pretty much what I'll be looking at on the IEF.
Okay, let's talk a little gold here with the GLD. This has been trying to find a bottom here between the 365, 380 area. Lots of stops and starts, lots of uncertainty, of course, on the geopolitical front, and the inflationary impact there that's kept people on the sidelines from the yellow metal. But I'd be curious as to your thoughts on it here in the near term, and also just on the weekly side of things.
Yeah, so GLD, it's been in this range for a few weeks now. We had a pretty sharp move down, sharp leg down, and we're kind of contracting that range. After range expansion, we typically get range contraction. So that's what price is doing right now. It's getting ready for another move higher or lower. We just don't know. It's getting ready for a breakout. We just don't know which direction it's going to be in. We are basing above a pretty significant area of support here, from weekly support here from 374 to 360. This weekly trend is still down. So here's what I'm looking at on this. A break above these recent highs at around 382 will open the door for price to test the 402, 395.80 resistance range above. A potential break above 402 will lead to a move into the 437.50, 417 range above. I'm actually going to refine that area. I'm going to go right here. So I'll be looking at the 421.80, 413.80 resistance range above. Now, if we get a breakout lower beneath here and a decisive break below 360, that's going to open the door for price to begin moving lower into these lower areas here, 339.15, 326.20 first, followed by 313.50 to 99.90, call it 300. So that's pretty much what I'm seeing. But this weekly area of support does line up with some monthly support as well. So we may potentially get a bounce out of here. I do want to see what we do around these recent weekly highs for a potential bounce higher, or the weekly lows for a potential continuation lower.
All right. What about for silver, Chris? SLV.
Yeah, similar picture. Pretty significant area of weekly support here. We tested below it and then kind of moved back into the range. We have support from 52.95, 51.15. A break above about 55 is going to open the door for price to first test a 12-period moving average at around 57.50, followed by the 64.70, 61.30 range. A break above 64.70 will likely move it into the 70, 75, 68.35 resistance range above. Likewise, on the bottom end of things, a break below, I guess I'd say a break below 49.40, which is this low over here from a few weeks ago. The exact number being 49.60 is going to lead to a move into the 45.80, 42.50 support range below. And this is if we don't bounce higher off of this support range and move into this range here, 45.80, 42.50. Again, I'd still watch for price confirmation, but I'd expect us to get a pretty significant move off of this lower range here.
All right, next up, oil. Obviously, very headline driven these days. And you can see that roller coaster chart unfolding here. We do have the USO sitting right, well, bounced off its 20-day moving average today anyway, 118.36. So what levels are you watching here for USO?
Yeah, so for USO, we got that bounce higher off of that monthly 12-period moving average a few weeks ago. Taking a zoomed out look on the monthly time frame, this chart looks pretty healthy. This trend, despite this recent pullback that we're seeing, we're still in a pretty healthy uptrend as long as we hold above this 100 level. Yeah, about 101, 100. Momentum is confirming price, making higher highs, higher lows on a weekly basis. Zooming into it, so this is what I have. That weekly support range that we bounce higher from is at 108 down to about 101, right on top of those 2019 highs, which are right over here. We moved higher. We broke above this resistance range that had formed on the way down, shaded gray, from 120.50 to 114.75, and tested the 140, 140, 133 range, and then kind of shot down below. We're now testing this this area that we broke through, this former resistance range that we broke through. We're kind of testing above that area right now. If you take a zoomed in look on it on the daily time frame, if you take a look at the daily support zones within those weekly bars, we are at a pretty we are at a layer of support on the daily time frame, from 121.20, 117.75. So I'll be paying attention to this candle. I want to see what we do around today's highs tomorrow. If we get a decisive break above that, that might indicate that we may be potentially reversing higher off of this level. So that's pretty much what I'm seeing on there. Support from 120, 120, 117. We're kind of in this overall weekly sideways range. In order for a meaningful move higher, we have to break above 140, 140, which is going to move us into the 172, 159 support or resistance range above.
All right, how about Nat Cash, UNG?
This one's been a tough one. I have resistance at 1080 to 1040, followed by the second layer from 1210 to 1150. Weekly downtrend. At least on the ETF, I don't think that we're encountering any price resistance or any price support. Yeah, I'm not seeing any support on the actual ETF. We could go ahead and look at the futures. But what I do is
futures chart there, Chris.
Yeah, I could do it. I should have it here, right there. Yeah, so futures weekly chart, we are in support over here from 268 to 50. Pretty strong area of weekly support. We do have another layer just above it here, from 290 to 288. So if this layer holds, we'll likely get a test of the initial overhead resistance range from 290 to 288. A break above 290 would likely get us into the 340, 320 range above. That's pretty much what I'm seeing on natural gas.
All right. Moving on to the dollar here then via the UUP. We'll take a look at that. But that has been edging up in front of this Fed meeting. Obviously, expectations for some tightening certainly help and provide a boost here. So, what do you see in the UUP?
Yeah, so pretty strong weekly uptrend. We are hitting some weekly resistance here, a pretty significant area from 28.65, 28.50. We did test just beneath it a few months ago, November 2025, and had this reaction lower. And this is now the second or maybe the third test into it. From on the bullish side, I do like that we are closing deeper into this range. We did have a deep close within this range last week. On last week's candle, we are forming a daily or weekly support range here from 28.40, 28.20. As long as we hold above this range and get a decisive break and close above 28.65, that's going to open the door for the dollar to move up into the 29.40, 29.10 resistance range above, followed by the 29.90, 29.65 area.
Okay. Let's take a look at the Japanese yen then, if we can, real quick, just because, obviously BOJ is going to be out after it. So I certainly want to keep an eye out. But you got any thoughts on yen here, Chris?
Not much besides here. I'll mark up some levels over here. We are at all-time highs on it. We do have this support range here on the weekly. Pretty strong looking chart, definitely.
Just to be clear, so people don't get confused, that means that's the low for the yen when we're at all-time highs. That's how much one yen gets you $1. So the higher that up is, the worse it is for yen.
Yeah, definitely. This is the dollar yen spot currency chart. So it's the inverse on the actual yen. So yeah, I do have support here from 161.75, 160.50 on the yen.
And also, real quick, Chris, did you say all-time highs?
I said all-time highs, yeah.
Yeah, it would be the highest since '87, right?
You know what? Over here on my charts, yeah, trading views going back to 2003.
Yeah, no problem. Yeah, back in '86 would technically be the highest. It opened up at 199.
Yeah. I'm seeing that on the other charts too.
Okay, yeah. Sorry, I just wanted to clarify that.
No, you're good. No, thanks for calling that out. So I have, let me see. So I have weekly support at 161.75, 160.50. There's another layer just beneath it here, from about 160.20 down to about 159.53. So that's pretty much what I'm seeing on there. We do have another layer here below from 156.85, 155. Pretty healthy uptrend, but I need to get that data from the early from the 80s in order to see where resistance comes in, because I'm not seeing it right now on this.
Yeah, I mean, basically, if I was looking at it, Chris, my read would be, you got to go to a yearly chart in order to even get it. But for me, really, it looks pretty much unabashed until 199. I would say that is where we opened in '86 at a low of 151, closed the year at 158. The high was 202. But there's not much in terms of support levels that you could look at least that are 40 years old at this point, right? So bottom line is Japan is in a situation where they're trying to fight to protect the yen there, because don't forget they import all their energy, so that yen falling off when you got to pay for everything in dollars, it's not a good look for them on the import side. So that has the Bank of Japan to get pretty aggressive moving forward here. So something to keep an eye out on Wednesday night.
Yeah. I will say, I will just add this to it as well. Whenever you're looking at whatever you're looking at, whether it's a name that's at all-time highs or whether it's a name that's hitting support, hitting resistance, I'm always looking, whatever time frame that I'm looking at, I'm always looking at what it does, what price does relative to the prior bar. So let's just say we were closing this week over here, like the way the candle's looking right now. It is an inside bar, I believe. But what I'd be paying attention to is, are we holding above the high? Are we breaking above the high of the previous bar, or are we breaking below the low of the previous bar? Because in this situation, if we were to see a break and a close below the previous bar, it indicates that, hey, we might be correcting and pulling back down towards support. So that's kind of the process that I'm always going through on any time frame when I'm looking at potential support areas, potential resistance areas, or even at all-time highs. All-time highs are harder because there is no resistance over there to get a reaction off of, but I'm still kind of following that process each time assessing price action.
Okay. All right. Let's take a look at Bitcoin real quick, Chris. It's another one that's been trying to fight off a floor here. Do seem to be seeing some higher lows and higher highs, at least over the last 2 weeks or so.
Yeah, so we did have this pretty steady move higher over the last several weeks into an area of significant resistance here, though, from 67,250 to 63,235. Has that 12-period moving average running through it as well. So far, we're seeing selling pressure beneath this range. I think we'll get a better picture tomorrow once we get the Fed coming out with the statement and with the actual rate. I think it's going to move Bitcoin, but so far we are seeing some selling pressure coming in at resistance. I'd like to see a break above 67,250 in order for a run toward the 78, 125, 73, 570 range above. Otherwise, if this range holds and we turn lower, continuing this weekly trend, we're likely going to test this area here from 57,280 down to about 52,550.
All right. Let's take a look then. We're going to break into some of these sectors. We'll start off once again with the XLK technology. Good call so far for me on this, Chris. You've been leaning on into this for the last couple of weeks here. Certainly in a downward trend right now. What levels could we maybe see this get arrested and perhaps find a bottom, or are you looking more along the lines for a potential flush at this juncture?
I think right now it's looking. We'll get some intermediate term pullbacks, I'm sure, but right now it's looking like it wants to test this 161.80, 156.15 support range below. And the reason why I'm saying that is we're making, on a weekly basis, we're making lower highs, lower lows. We just took out this swing low here, which was pretty much acting as a floor for the market at 172.90. And as we did that, we formed two layers of overhead resistance. The first one from 181.40, 175.90. Second range from 186.40, 182.65. And as long as we hold beneath these ranges and continue to drill lower, I think we're gonna try to get down into the 161.80, 156.15 range below. And if we do see that, if we do see, XLK has been the primary, XLK and its components have been the primary driver of the indices over the past few weeks. So I think if we do see that move down toward these ranges, we'll see the indices coming under pressure as well.
All right. Next up, the XLC. Of course, Meta out tomorrow. That'll certainly be a key driver for this one. What's your thoughts here on XLC? Nice bounce the last couple of days.
Yeah, so it's pretty much in this overall weekly range over here. We are making some lower highs and lower lows. But we did get last week tested below this range from 107.50, 105.55, tested below it, closed back within it, and this week we're getting a bounce higher. We are approaching resistance here though at 113, 111.40. So if price holds, but you know what I'm gonna do? This resistance range here, we poked above it, shot back below. I'm gonna just encompass this area here. I'm I'm just going to keep the current range that we had over there. I'm gonna treat it as we didn't break that range. We did it since we wicked above it and closed below it. So we're approaching current resistance from 113 to 111.50. If we hold below this overall area here, we're likely gonna move back lower into the 107.50, 105.50 support range below. And if we do see a break below 105.50, a decisive break below it, that's going to get us, likely going to get us down into the 101.50, 99.50 support range below.
All right. Moving on next, we'll take a look at consumer discretionary, the XLY. Of course, Amazon, big proponent of this. It's been a weak-looking chart, though, Chris. So, real quick, what's your thoughts on XLY?
Yeah, so we had this daily support range here drawn up a couple weeks ago, and when we were talking about it, price broke below it last week. That range was from 113.50, 112. It tested this weekly support range below at 108.15, 105.20. And now we're seeing a bit of a bounce higher. We have the 12-period moving average that's coming in right around 115. So if price does trade up to that, it's gonna create some dynamic resistance, followed by the actual price resistance range from 119.50, 117.15. So that's what I'm seeing on there. As long as we hold above that moving average, above this resistance range from 119.50, 117.15, we're likely going to flush back into the 108.15, 105.20 range, followed by the 101.20, 98.35 support range below. In order for consumer discretionary to make another run at all-time highs, I'd like to see a decisive break above 119.50. We'd still need to get above the 125, 122 range, but that's going to be the first. That's going to open the door for price to potentially begin moving higher.
All right, next up, we got arguably the strongest group in the strongest sector in the market since financials, the XLF. RSI running just at about 70 here in the XLF. Is this overextended, or is this a healthy chart for you?
Okay, so just looking at the actual price action, it doesn't show signs of extension, because for me, I quantify extension as a straight move up or a straight move down. We've been stair stepping up. We're moving higher, pulling back, moving higher, pulling back. So it's not extended, but I am going to point something out in the XLF on a monthly time frame that I'm kind of seeing as a smoke signal. But before I get to that, I do want to point out we do have support here, from a weekly support here that led to that all-time high, that led to that move higher from 56.30, 55.45. This week hasn't closed yet, so I do want to see what this candle looks like at the end of this week on Friday. But nonetheless, we do have this range below from 56.35, 55.45, followed by 53.75, 53.20 below. The thing that I noticed on the monthly time frame, on a bigger monthly time frame, is momentum, RSI. It's negatively diverging from price. If you take a look at this high that formed here, so we formed this high over here back in October 2024 or November 2024, and now we're making another high, all-time high. But while price is doing that, where momentum is not getting above that October or that November 2024 high. So it's negatively diverging from price at this point. It's not to say that it can't, but right now it shows that price is not showing that same momentum to the upside as it was when it was breaking out to all-time highs back in 2024. So a bit of a smoke signal. Not necessarily extended on that weekly time frame that we were looking at, but that negatively diverging RSI on the monthly time frame does kind of indicate that, hey, we may see a potential pullback.
All right. Next up, healthcare, XLV, another strong area in the markets. This RSI just running just underneath 70, right around 68. Had that pop up, but it's pulling back just a little bit following this morning's move. Chris, what's your thoughts here on healthcare?
Yeah, pretty clean looking chart. We formed new support here at 162.50. down to 157.25. We formed that support. Give me a sec. Did my mouse run out of battery? Oh, there you go. So we formed a new support here from 162.50, 157.25 as we broke above these previous swing highs over here. We have another layer of support at 153.70, 148.80, and its price is pretty much trading at all-time highs. So as long as we're breaking above these recent weekly highs, I think this has a potential to continue forward. We can get a pullback into support as well, which may serve as a launching pad for another leg higher.
All right, then we got materials, XLB.
XLB.
Trying to break out of that sideways trading range, it seems like, this morning.
Yeah, so we're in this overall range. Bottom layer 50.35, 48.90 support. Top layer 53.75, 52.50. It's attempting to break out of it. We need to see a decisive break above. I have that number wrong over there. It should be 53.70. But we need to see a decisive break above 53.75 in order for the monthly uptrend to resume and continue higher.
All right, industrials, they had a really good day on the earnings front here today. The XLI have this one sitting here trying to build off that 20-day moving average. Bit of a sideways trading range over the last couple of weeks. Any thoughts on XLI?
Yeah, we have support here, 181.20, 177.25, followed by the bottom layer at 173.25, 168.10. In order for this level to hold, if price holds above this level, turns higher, I'd like to see a break above this high here at 186.45 to continue this weekly trend, continue the weekly and the monthly trend higher. Pretty good looking chart.
All right, so would you say this is probably arguably one of your favorite charts out of the ones that we've looked at so far then?
I'd say between healthcare and industrials, yeah.
Okay.
Both of them are breaking out into, industrial healthcare is making new highs, so it's relatively stronger versus the XLI, but both of them are pretty healthy looking charts.
Okay, let's take a look at the utilities, which has the look of a pretty good chart, except I guess question I'd have, if I'm looking at this on the daily, those upward tails that I keep seeing there, Chris, is that something you'd be concerned about?
On the daily time frame?
Yeah.
Let me see. So we did have this level of resistance here that we broke through. We never closed above it, but I'm going to take that off. That's actually a reaction to this range here. Right there, 46.80, 46.35. The tails are pretty much a reaction off of resistance. We're in this overall sideways range. Not seeing any clear-cut direction on it. Flipping back over to a weekly time frame, I do like the look of the prior weekly candle and how it reacted off of this 44.75, 44.20 range. It tested into it and then closed higher at the upper end of its range into resistance from 47.70, 46.35. Price is now testing that 12-period moving average. I'd like to see what we do this week, or maybe next week, over the next several weeks. If we do see price digging deeper into this range, digging deeper into resistance, that's likely going to break above 47.70, which is going to continue the weekly trend that we've seen higher, the weekly and monthly trends that we've seen higher.
All right, next up, Staples XLP. That big breakout early on here today following the Coca-Cola news. Has pulled back and given up a lot of those gains, though. Has this got the making of a false breakout reversal here at all, Chris, or too early to tell on that?
So weekly time frame, it's too early to tell. I want to see how this weekly candle closes. I want to see how this candle looks on Friday since we're dealing with a weekly time frame.
Yeah.
We did form new support here though. 85.15, 82.80. We formed a new layer of daily support which broke through these recent sideways range highs, and so far we tested this resistance range right beneath the all-time highs from 90.15, 87.90. So I do want to see this support range can be a potential launching point, a trigger to launch prices higher, deeper into resistance, and potentially break above 90.15. But I do want to see how this candle closes this week on Friday. We need to see a decisive break above 90.15 in order for the staples to continue moving higher. But taking a look at a monthly time frame, this chart looks like it has the legs to move higher. We are forming some support here on a longer term basis from 84.30 down to 80.50, right above those prior swing highs that we broke above. So it's pretty constructive. So far it's looking pretty good.
All right, then we got real estate XLRE. Obviously, keeping a look on those yields, but this has been moving nicely higher here, up through that 45 area. Another decent looking chart, I would say, here on the XLRE.
Yeah, so we did break through this area of resistance that we were talking about a couple weeks ago, maybe last week it was, from 45.90 to 44.75, and are now we're looking like we're going to close above it. As long as we keep closing above it, continuing higher, we might get a pullback into we actually formed some new support here. I'm going to move this level up, and we have a new layer of support here from 44.70 to 44. As long as we hold above this level and continue higher, we may see a pullback, but as long as we hold above it, that's going to open the door for price to begin moving toward the $50 48.65 resistance range above, which should bode well for the components, for the XLRE components.
All right, then the last one we will look at here, Chris, energy. XLE, looking a lot like USO, just kind of choppy here at the moment.
Yeah, so very similar looking chart as the USO. We have weekly support here from 53.98 or 54 down to about 52.60. Price moved higher, tested the upper end of this recent sideways range that we've been in on the weekly time frame from 61.70 to 59.10, and now we're seeing a reaction lower. We're testing right above, or we're approaching this 12-period moving average. Within this bar, within this weekly bar, we do just like the USO, we do have daily support from 56.95, 55.75. So if price holds above this range, and moves higher, we're likely going to test these recent highs here, which is pretty much the weekly resistance range from 61.70, 59.15. So I have a layer of support that I'm keeping an eye on from 56.95, 55.75. This is a daily level within this weekly bar, and then the layer below from 53.98 or 54 to 52.60. I want to see a decisive break above 61.70 to potentially get another leg higher in energy, because taking a look at this overall range that we've been in over here, we had this big move, we had this large move higher from December 2025 until about April 2026, and then we're consolidating that move, we're contracting that range. We're going to get another move either up or down, but we have to break out of either the top or the bottom to get a directional bias going. And for me, if we see a decisive break above 61.70, that's going to open the door for another leg higher in energy, another leg higher in oil as well.
All right, Chris. Well, that takes us to the end of our macro here. We did want to just take a quick look at the hyperscalers real quick, as they're going to be reporting Wednesday after the close and Thursday, and we'll start with the Wednesday ones first, Chris. Before we see the print, Meta, it's breaking down a little bit. Obviously, slipped down below the 200-day moving average a couple days ago. Now it's dipping down below the 50. Can't get back above that. 600 as well. Trying to fight to hold on that, but this looks a little concerning to me going into this print. Um, what's your thoughts on this chart in front of us?
Yeah, so overall weekly time frame, it's in a pretty congested sideways range. Zooming out and taking a look at the monthly time frame, we are forming lower highs and lower lows. So I am seeing that on the larger monthly time frame. Going back down into the weekly, within this overall area of congestion, we have a pretty significant area of resistance here at 686, 646, followed by the second layer above from 759.15, 721.20. And we are approaching an area of support from 575.80, 540.15, call it, with the second layer below it from 488.15, 442.65. There's not much. I mean, we are trending. We are seeing some lower highs and lower lows developing on the weekly time frame as well. It's not as clear cut as the monthly. Obviously, it's a little bit more noisy. But yeah, it does look concerning to me as well going into earnings.
All right, and then we got Microsoft as well. I took a long on this. So the gamma setup for this, Chris, does set up for a potential squeeze above this 390 area up through 430, which of course 200-day moving average is sitting at 434. And one of the weaker names, of course, in 2026. But I'd like to set up on this, especially when I saw some of the positioning into earnings. I'd be curious as to your thoughts for the chart on Microsoft.
Yeah, so this is what I'm looking at. I do like that Microsoft did hold these lows over here and bounced higher. So we did find some pretty strong support, weekly support at these lows. We're now testing this 12 period moving average. Last week we reacted lower. This area here was a reaction to this broken swing low right over there. So this broken area of support did create some resistance. Now for me, it's so we do have something that's forming over here. We just don't know if we get a decisive break. The way that I'm looking at it, if we get a decisive break above 406, that's going to open the door for price to test this minor area here at around 430.50, followed by the 489.70, 469.50 range. However, if we hold beneath this area, if we hold beneath this weekly high at 406 and begin testing lower, we're likely going to run into these lows again around 360, 355, and a break beneath those lows would take us into the 330, 309.50. I'm actually going to refine that into this area here. A break beneath these swing lows would get us down into the 330, 323, 15 range. So I really want to see what we do over here. A break above this 406 is going to open the door for price to begin moving higher, while if we hold below 406, that's going to potentially open the door for some downside.
Okay, and then moving on to the Thursday's names, we've got Apple, which has been the strongest Mag 7 name. I do fear it might be a little overextended. It's gotten pricey here, Chris.
Yeah.
What's your thoughts on the chart?
Yeah, so we are seeing a pretty straight line up in Apple. Nothing to show us that, hey, this is getting ready to reverse just yet. I'd like to see, just like I was talking about earlier, I'd like to see a break below this week's low next week. And again, if we were looking at a daily time frame, that would have been on the daily bar. Nothing to show us anything just yet, but we are seeing a negative divergence forming on the weekly chart as well. Price formed price is making new highs. The oscillate the RSI is making it's not making new highs. It's not making a lower high just yet. It hasn't confirmed it just yet, but it's not breaking out into all-time highs, so it's not confirming what price action is showing us. So I am seeing that on the momentum front. That's what the RSI is showing. We can potentially get a pullback in Apple. If we do, the first layer of support that I'll be targeting is a 315.30, 307.35 range, followed by these two daily support ranges within this overall weekly range from 294.40, 289.20, and followed by the 283.80, 273.75 support range below.
And the last one, Amazon, another one that kind of looks a little concerning to me. Down below the 200-day moving average, just hasn't been able to find a bid. Really, you got to go back to June 25th, the last time we saw any real buying going on. I had that pop up to 257, now grinding back down. A little bit of gap support, I suppose, at 219 back. That you have to go back to April 8th for. But what are some key levels you'd be looking at for Amazon here, Chris? And what's your thought on this chart going into the earnings?
So we are making lower highs and lower lows over here. We do have new resistance that formed just last week from 258 to 244.70. If price holds beneath this range and gets a break beneath this swing low here at to confirm it gets a break below 225.55, 225.50 call it, that's going to open the door for price to begin moving lower into the 209.75, 196 range. But the way that I look at it is current ceiling 258 to 244. If we hold beneath this range, we're likely going to move lower and test 209.75, 196 range. There's another layer of resistance just beneath all-time highs from 274.75 to 267.95. So we are in this overall sideways range. It is a bit messy, but we are beginning to see price making some lower highs, which is beginning to look a little concerning.
All right, and I think that is do it for us today. But Chris, any last comments before we let you get going over here?
No, I think we'll get some direction once earnings season is over, with earnings, and once earnings season is over. Also with the Fed tomorrow. Also, we're kind of smack in the middle of summer, so I think going into September, end of August, September, I think volatility will start picking up a little bit. We might start to see some breaks out of these sideways ranges. But that's about it. I'm going to be away for the next 2 weeks. I'll be returning. I'm going to be away until the 14th, returning the Monday right after. But I'll be paying attention to markets. You can't really get me away from markets, so I'll be paying attention to them. I'll be posting some comments as well. So any questions you guys have for me in the meantime, I'd be happy to answer through email or probably through email. So that's about it.
All right. Well, you go enjoy that vacation there, Chris. Definitely looking forward to hearing about that. Appreciate all your comments here. We are going to be posting this to the site in a little bit. So everybody keep an eye out there. But definitely keep an eye out on these levels. They've been hitting pretty nicely here for Chris the last couple of weeks, and certainly have provided us where the Pong game is being played. That's for sure. In the meantime, Chris, 74.25 div to hold support in the SPX. We have bounced back to that 74.40 area, so we'll keep an eye out on this as we go into the final hour of trade.
Yeah, definitely. And guys, one other point. Whenever I'm pointing out these support resistance levels, I'm always watching price reactions as price gets to these levels. Whether it's a 65-minute level, a daily level, a weekly level, I'm always watching price, looking for signs of confirmation before getting involved in a potential trade at those areas. So just wanted to note that as well.
All right, thanks a lot, Chris. All right, we'll talk to everybody soon here. I'll be around all afternoon, obviously, so will Chris.
All right, guys. Talk to you soon.